Good afternoon. My name is Chris Jenkins of Gerald Thomas Chartered Accountants, and today, along with my colleagues Brian Garland and Rachel Doyle, we'll be spending about 20 minutes discussing cash, funding, and working capital considerations for business. With the COVID pandemic and with lockdown measures continuing to be in place, companies face a fight for survival, particularly as cash, the lifeblood of any business, is quickly being used up. It's fair to say that certain businesses have been affected worse than others. For example, those in tourism, hospitality and non-essential retail being hit the hardest, a feature often in the media as such. However, over time, any business that services predominantly SMEs will have a tougher time, as these size businesses particularly will be looking carefully at their costs. Will therefore ripple out further and further along the supply chain and impact associated businesses that at first you wouldn't necessarily expect to be affected. For example, professional firms such as solicitors or advertising agencies. If their clients are suffering and decide that enough is enough and ultimately close their doors, those associated firms lose a client, and along with it, its associated income, putting that business also at risk. Since March, the immediate response of most businesses was to raise finance to cover any short-term funded requirements, with the government aiding through the emergency financing schemes such as bounce back loan or the C-bills. Also, VAT deferrals, time to pay agreements and furlough payments. However, these packages are just short-term solutions and don't address longer-term survival. Forward planning is particularly important for companies looking to restart trading under the new normal, and with Rishi Sunak making it clear that support packages are to come to an end and it'll be up to the businesses themselves to fight for survival. Additional cash flow will be required to finance stock purchases, fund work in progress and support debtors. In spite of general support packages, losses made during the previous lockdown will have eroded working capital and will limit a business's capacity to grow. If this new lockdown gives rise to additional losses, this will further erode working capital, even to the extent that it will run out of cash as turnover increases. It's always been an important tool, but even more critical now, having a rolling 13-week cash forecast and P&L forecast in place. This will assist businesses know its cash requirements at any particular point, which Rachel will touch upon further. Brian, I'm going to come to you first. This isn't the first time in recent history that we've seen a widespread economic crisis, is it?
No, I'm sure people will remember, if they were active at that time, the 2008 crash and the difficulties that caused. And there are quite strong parallels between that time and now, and there are also quite strong differences between the two periods. I mean, if you look at it as to what happened, 2008, basically the economic kind of world as we know it came to a juddering halt. Credit stopped. It was, in terms of companies trading and doing business, it was a very difficult time. In some ways, this has got similar parallels. Turnover is under threat, activity levels are under threat, and there's uncertainty. If you look back to those periods of time, you can see that certainly in 2008, there was a situation where funding for all sorts of business activities were just not available. The banks were under severe pressure, the governments of the world were under severe pressure, and they weren't able to inject funds quickly into the system in order to help things improve. Now, that hasn't been the same thing in this kind of epidemic. Most governments have kind of done their best. I know there's plenty of scope for criticism, but they've all put things in place, measures that are effective in terms of providing finance and providing safety for jobs fairly quickly. And that's an interesting difference really between the two periods. And the kind of way that it's all moved around the world. In 2008, there was a strong degree of cooperation amongst the different governments, the US, the Europeans, the UK, even the Russians were all trying to work together to help the position. Sad to say, I don't really see that form of international cooperation. It's more about let's take what we can, let's blame who we can, and let's move on. We've got the overlaying problem of Brexit in the UK to think about, and really that's taken a back seat at the moment as to where we are and where we should be. So it's a challenging time. That there are pluses and minuses, and certainly there are also kind of issues that go back to the two periods. Yeah.
So, it's always important to kind of learn from the past. And as you say, there's been plenty of times when the economy has taken an impact in different guises. Is there anything we can learn from the crises of the past, from your experience and your knowledge of working with businesses over many years?
I mean, I think if you start back to 2008, the big problem was not so much what happened there. Businesses either survived or they didn't. It was coming out of 2008, pardon me, coming out of the recession, and businesses there, as they came out of recession, were often quite profitable. But the issue that they faced was maintaining a positive cash flow, either because they were just growing too fast, they were over trading, or because they hit problems en route, such as bad debts, etc., where their reserves had been depleted during the hard times and they didn't have any kind of reserves to fall back on. Now, that has probably got similar parallels to this current era. And again, something that companies need to plan against. They need to make sure they've got adequate working capital in place so that as and when and if we do get a kind of return to normal, they have the funds in place to be able to fund their business, their turnover as they grow, and take account of any little knocks that they may come across as they go through the process. So that very much is about, putting in place proper levels of funding, putting in place the appropriate type of funding, so short-term and long-term, and running lots of what-if scenarios. So if things go wrong, they've got some idea on where their pinch points are and what, if any, areas they can use in order to get additional funds relatively quickly. So those are the points I would make on that.
Ties in nicely to what I know we're going to touch upon with Rachel now. And those businesses that just finding their feet again could experience crippling cash flow problems that could force them out of business as early as 2021. Rachel, why would profitable businesses experience problems because of the pandemic?
Well, I think we've covered some of these points in what Brian said and what you yourself have said. But in a lot of businesses, the business owner, the business owners tend to have a feel how their business is run. So they may not have a system of having formal financial projections, because generally an experienced business owner will know that if they're making a certain level of sales, if they've got a certain amount of orders coming in, they know what their cost profiles are, so they can really sort of anticipate their cash needs based on experience and, in a way, sort of gut feel. And I think the problem that we've got now is that the sort of normal business environment is completely changed. So if you're looking at a profitable business that is, sort of picking up after everything that's happened, they're going to have a much weaker balance sheet. They're going to have loan commitments that they wouldn't otherwise have had. They're going to have deferrals of tax that need to be paid at some point. And even if they're growing and they're getting additional orders in, they've also got the risk then that their customers aren't going to be able to pay them as quickly, and their suppliers may require shorter credit periods. So that sort of gut feel that a business owner might have and it has relied upon for years and years is there's a risk that that business may face cash flow problems that couldn't have been anticipated previously. So I think the important thing that a business really needs to put in place, if they haven't already got it, is a proper system of forecasting, sensitized forecasts, so that they can anticipate these dips in cash that are going to happen. And we're seeing this with clients at the moment, is that a lot of our businesses have a big risk in especially early 2021, where cash is going to become really tight. And I don't think you can rely upon a sort of a gut feel and the way we've always done things to get through it. The important thing is going to be initially information, you know, to accept that there may be a problem, to try and quantify the problem, anticipate it, and then take action to deal with that problem.
And I think it's important to get the whole business on board as well. And I think, you know, people lack the experience of producing cash flow forecasts or P&L forecasts, but you know, they're making an attempt at them now, but almost in kind of isolation as well. And you know, it's important to get the whole business buy-in when you're producing any kind of forecast. So you know, whether it's, you know, it can't just be the finance side. I think there needs to be the HR department, the sales team, the purchasing guys, the legal, you know, every aspect of the business. And you certainly need kind of buy-in from all parts of the business. But it's equally important then to kind of make sure that's communicated amongst the team as a whole, but also to kind of external stakeholders as well. And again, you know, it's important, you know, if in your cash flow you anticipate paying a supplier, you know, in month whatever, that's communicated to the supplier as well. So you know, you're working internally and externally just to make sure everyone's aware and everyone, you know, it's communicated amongst, you know, all important. I think everyone's got a level of understanding and appreciation once, you know, that is communicated out there. But Rich, what can business owners do now to stop the worst happening in your view, and from your own clients? You know, how have you kind of helped them navigate through this kind of situation?
Well, I think each business is different, and the tools that will be useful will depend on the business. So it's excuse me, certainly not a case of one size fits all. And I think that's the way it's important to look at it, is that it's not just a case of saying to a business owner, well, you know, do a projection, do a forecast. It's really tailoring the approach to the specific business, which is very important. And then not just producing the numbers, that's only one part of it, that's just the anticipation part of it. The important thing is to act upon what those numbers are telling you, and then to constantly reassess and re-forecast with the information as it comes in, so that you're always one step ahead of the future, really. So, you know, what I'm saying to clients is, okay, you know, financial planning is key. It's always been key, but this pandemic has really highlighted how important it is. You know, I think when we get to spring next year, we're going to have, excuse me, media reports of businesses that have gone under, obviously, because they've been unable to trade or continue trading. But there's also going to be business reports of, media reports of businesses that have gone under, because even though they were profitable, they didn't plan and they ran out of cash. So, as I say, first of all, you know, it's getting that tailored approach for your business so you can anticipate a problem, and then it's taking action to do whatever is needed. You know, whether that's changing supplier and customer credit terms, whether it's getting the short-term funding, whether it's an invoice discounting facility, but to do something so that you're not basically at the mercy of your reducing cash.
Brilliant. And, you know, I think the message is clear, isn't it, that, you know, forward planning and considered projections and financials, you know, is essential to try and reduce, you know, a very real problem. And as you said, you know, these projections need to be constantly reviewed and updated with actual performance to get a true picture of the situation at any point. You know, again, you know, repeating it, focus to date has been on short-term survival. However, longer-term planning, you know, with a plan of action needs to be in place to ensure that the business is in the best possible place to survive into the future. I'm going to thank both of you for the contributions. I'm not sure, Brian, obviously Rachel's added a few points already served. Is there anything you wish to kind of add following that?
Well, I just think that everybody needs to be starting to look towards the future, the turn of the year, because unfortunately, with so much uncertainty around, the first approach can often be, well, it's all uncertain, there's no point planning, but that approach will not pay any dividends in the long term. So, you know, look to the future and model and do what if scenarios to see what impact it might have on your business.
Rachel, anything you wish to add in the end?
Well, I think Brian's points are really valid, but I would sort of emphasise the fact that I think it's not a one-size-fits-all solution, and that it should be a sort of personalised, bespoke approach that fits your business.
And I think, just to kind of close the session down, and as a firm, we've undertaken a number of projects to assist our clients, from producing forecasting models, challenging the assumptions. We've got vast experience and knowledge to ensure a robust plan is in place. So, if we can help in any way, again, using and tapping into our resources and experience, be more than happy to kind of help. Our contact details will accompany this video, but our telephone number is 01792 465 155, or send us an email on inquiries@geraldthomas.co.uk. And those clients who are already engaged with us, that you have our kind of personal numbers and our personal email addresses. Rachel, Brian, thank you very much for your contributions, and good luck for everyone.